Hi, I'm Mark Persano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we have our FSC show. I know it's on the back of the Econ show, but we have the holiday tomorrow, so the data came out a bit early. And one of the things we want to look at is you can see that we had a drop of about, eight frac spreads. So we went from 295 to 287, and it's right in line with what we were talking about. So as for those that have been following us, our view is that it was going to be between about 285 and 295. 295 for us was the high. And then typically then you get a little bit of a lull as you go into Easter, Passover, spring break, and then you get a little bit of a lull in April, and then you start to climb back a bit, and then we'll get to about 290, but then in that range, 285, 295. And then as we get into May, as we progress into June, is where we're going to go from about 295 to 305 and stay within that range as we make that push into summer. So again, everything is very much in line with our expectations, seasonally normal, right, in terms of some of that slowdown, just because you have the holiday. It'll come back. But again, we're going to just stay within that 285, 295, unless things change drastically on the oil or natural gas side, which we don't see it happening at that point. For those that have gotten the insights, we think we're back into a Brent range of 82 to 87, kind of bouncing back and forth. So again, there's a lot of staying power at these levels. When you look at rigs, horizontal came down by 5, vertical up by 1. Very kind of stable for where we are. Now as we come to the other side of Easter holiday season, now we're going to start to see horizontal rigs start marching back up to about 700. And that'll happen over the next, let's call it 6 weeks as we progress through April. Really, May is when you start to get that pickup, and then obviously into June. So we'll start to see rig additions coming back as we get into the back half of April, which will then run us into May. When we look at oil supply demand balance, this is just looking at for the long view forecast that's pre and post OPEC plus cut. So when you look at it, it's in line with kind of what we were talking about. And for those that watched the EIA show and got our insights, is that the cut is essentially trying to put us back into a balance. And that's what they're trying to show here. And then the question is, where does demand go from this point? And one of the things that we've been talking about is that they're trying to kind of pin us at an 85 Brent. So which is why we've been talking about 82 to 87 is the range, trying to hold that 85 level. And that's really what they're succeeding in doing. It's just, you have to look at what are crack spreads doing. Crack spreads have come under pressure, especially middle distillate. And they're trying to clear that glut that remains on the floating storage in transit to try to get into more of a balanced market. So then when you look at Singapore, you can see that there was a small drop in stockpiles. It was driven by middle distillate had a small drop, light distillate had a small drop, still at near record levels on the light distillate side. Middle distillate's pretty stable, resid climbing again. So it's just a mixture of the back and forth. We still see builds coming. Gasoline had a small draw in Europe. Some of that is, again, as we said on the show, on the EIA show, there was a little bit of a pickup in exports from Europe that'll show up in the U.S., but everything else is continuing to see those builds. Now that's going to put a bit more pressure, especially on the gas oil side. So it'll be something to watch. But again, middle distillate and gas oil are going to be the keys. The problem is, as we've shown here, the outbound tender rejection continues to fall. It's actually now down to about 309, 306. So continuing to see this pressure point, which is just an indication on how healthy is that diesel market. And then when you look at that spot line haul, you're continuing to see the pressure to the downside, things that we showed in the EIA show, again in the Econ show, and just wanted to highlight how we're continuing to go down. We go a deeper dive on the in insights specifically into this and showing how we continue to see some of these pressure points going into summer on both gasoline and diesel. And again, the OPEC is seeing that, Saudi is seeing that, and so they're trying to protect this price. So take some of these barrels off the water, take these barrels out. Exports are going to be important to watch to see how this progresses going through. So that's what we have for you today. It's a short one just because we had the econ today. So everything else is in the econ show, trying to split it up evenly. Hopefully we hope you have a great Easter, a great Passover, a great break, depending on whatever you celebrate. And thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.